Hello everyone, welcome to my new YouTube channel. My name is Eric. I'm an accountant and I love investing in the stock market and analyzing companies. The idea of this YouTube channel is to share with you the knowledge that I have and make you a successful investor in the stock market. In this video we're going to be analyzing the buy now pay later companies that are trading in the Australian Security Exchange, so in the Australian stock market. I would appreciate if you could like this video and subscribe to my channel, because that would allow me to keep doing these videos. I would like to break down this video into 5 parts. I want to introduce and speak a little bit about how the buy now pay later companies operate. I also want to talk a little bit about the revenue and earnings that Flexigroup, Afterpay and ZIP have been having through the past years. I also want to talk about how these companies have been performing through the coronavirus pandemic. I want to show in the 4-point the share price, at what price these companies are trading now, and explain a little bit the behavior that they have been having. And finally, I would like to give my recommendation on these companies. If you should invest in them, why you should invest in them, and when is the best time to invest in them. So the first point that I want to talk about is how the buy now pay later companies operate. The way these companies operate is by allowing people and businesses, in some cases like Flexigroup, to buy things now and pay them later without having to pay any fees. And the way these companies earn their money is through charging the retailers, the merchants, or whichever company it is that you're buying products or services a small percentage, and through late payment fees. And though these companies try not to make their money through late payment fees. For example, ZIP only had less than 1% of their income in 2019 from late payment fees. I believe that this is a great business model because it's a win-win situation for both the customers, the people that are buying things, and for the retailers. It's good for the people buying things because it's allowing them to have an alternative to credit cards. It's allowing them to buy things that they need or want without having to pay them straight away, and they can pay them in installments without any fees. That's really good. Also, it's good for retailers and online shops because they are increasing their sales volumes. So in my opinion, the buy now pay later business model is a great business model. The second point that I want to talk about is the revenue and the earnings that Flexigroup, Afterpay and ZIP have been having in the past years. Before jumping into this, I would like to say something. Flexigroup is one of the pioneers, if not the pioneer, of the buy now pay later sector. So they are a more mature company. ZIP and Afterpay, these companies started just a couple of years ago, so they are still a smaller company than Flexigroup. With that said, let's take a look at the numbers. So we can see that Flexigroup has been having some great revenue. They've had almost $300 million in revenue for the past 3 years, and almost $250 million in 2016. We can also see that throughout the past 4 years, they have been having earnings. So that's good because not only they are making revenues, but they are having earnings. This means that after all the expenses have been paid, they still have money in their pockets to reinvest or to pay as dividends. Then we can take a look at ZIP and Afterpay, and we can see that neither of these companies are profitable yet. They are growing really fast and really strong, but they are different than Flexigroup. So let's take for example ZIP. ZIP in 2017 made $20 million. In 2018, they doubled the revenue. 2019, they doubled it again. So they have been doubling the revenue year after year. We can also see that they haven't been able to have a profitable year yet. So they have been having losses year after year. Same is happening with Afterpay. Afterpay 2017 made $200 million in revenue. 2018, they reached almost $120 million. So they had over a 500% increase in 1 year. And from 2018 to 2019, they grew to almost $220 million. So they doubled the revenue. And we can see, just like in ZIP, that they are also not a profitable company yet. Both companies, in my opinion, both the Flexigroup and the new companies ZIP and Afterpay have their pros and cons. The pros that I see in Flexigroup is that they have strong revenue, strong earnings year after year because they are a mature company. But ZIP and Afterpay, they might be the future because they are increasing at such an exponential rate that they could start competing with Flexigroup in the future. And soon they will be profitable as well. Just as a side note, I would like to say that neither Flexigroup, Afterpay, nor ZIP present any problems in their balance sheet. They all have healthy balance sheets, and this meaning that their total assets are greater than their total liabilities. And this is important, especially if you want to invest in a company during the pandemic, right, like the one we are experiencing right now. You want to make sure that you invest in a company that is not flown in debt, and a company that has more assets that can cover their total liabilities. For the third point, I want to talk about how these companies have been performing through the coronavirus pandemic. From what we have seen in their announcements and what they have told the news is that they have not been severely affected by the pandemic. The reason behind this is that they have strong online purchases. So people are staying home, and even though they are not going out and buying in physical stores, they are still buying online. So that has been great for the buy now pay later sector. Also, there have been two really important announcements lately, and that's that Afterpay has an investor, which is the Chinese giant Tencent. Tencent bought 5% of all the shares of Afterpay. And recently we saw that ZIP bought QuadPay, which is a similar company in the United States of America. So this is also really good for ZIP because it gives access to operate in the United States of America. So for the fourth and fifth point, I want to talk about the share price, how the share price has been behaving through coronavirus, and also give my recommendation to you guys. So if we take a look at ZIP and Afterpay, they're trading at a higher price than the price that these shares were trading before the coronavirus pandemic. The reason for this is the announcements that these companies have given lately. So for Afterpay, it was Tencent buying 5% of the stocks of Afterpay. And for ZIP, it was the recent announcement of ZIP buying QuadPay and getting access to the US market. On the other hand, we have Flexigroup, and they're trading 46% cheaper than the price that their share was before coronavirus. So my recommendation with these stocks is the following. I feel like ZIP and Afterpay, they're overvalued. I agree with most of the analysts, and I feel like at some point the share of ZIP and Afterpay might drop, or it might stay at a similar price. It might keep growing because of the hype, but it's a riskier move to invest in these stocks at the moment. I feel like a safer and better investment is to invest on Flexigroup. The reason is because Flexigroup is trading 46% cheaper than its previous price, previous to coronavirus, and Flexigroup has not been affected by the pandemic in a way that it makes sense for the stock to be trading so low. So I feel like there's a lot of room for Flexigroup to grow, for the share to grow, and especially after the pandemic goes away, that's when it's gonna be obvious that there was no reason for the stock to not have gotten back to their original price. Again, thanks for watching this video, and please like this video and comment, tell me what you thought about it, and hope to see you in the next video. Thank you.